Welcome back to the Deep Dive. Today we are taking a single source, a pretty detailed article from November 14th, 2025 by Emma Rose, and we're going to use it to really dissect a huge story from that week, the Aztec network token launch.
Yeah, it was a big one.
And our mission here isn't just to, report the facts. It's to understand the architecture of the crisis itself. We're asking why the author framed it this way. The title alone, Aztec network token launch, sparks controversy, sets the stage perfectly.
It really does. And that structure gives us our blueprint. The author lays out a table of contents, which is, it's basically the narrative roadmap they want us to follow.
Right.
So we go from an overview and key takeaways right into the critical stuff, tokenomics breakdown, criticisms and pre-sale conditions, then a shift in strategy, and finally, the future of Aztec network.
That roadmap, just on its own, suggests the whole controversy was baked in from the start.
Exactly. It's rooted in the financial design and the early access terms. And, the fact that they included a whole section on a shift in strategy, that tells you this wasn't just like Twitter noise.
No, this was serious.
It was a crisis that forced the team to completely change direction.
I think the starting context here is just as important as the content. Before the article even gets to Aztec, the material around it sets this incredibly cautious tone. This isn't some crypto blog. It's a regulated financial publication.
That's the essential groundwork. The first thing you see, and it's impossible to miss, is the risk warning.
Mm-hmm.
And it's not just boilerplate text. It's an explicit statement to the reader that this is all for reference, and it is absolutely not investment advice.
It seems really heavy-handed, even for a financial publication.
It is. It focuses on things like Forex and contracts for difference, CFDs. And it says they're, and I'm quoting here, highly speculative, carries a high level of risk, and is not appropriate for every investor.
Okay, but why lump in Forex and CFDs? Those are traditional derivatives. What does that have to do with the decentralized token launch?
That's the critical link right there. The publication itself is mandated by regulators to issue these warnings because they deal with high-risk products. So by putting the Aztec analysis right next to this, they're framing the token launch as having an equivalent risk profile.
Ah, okay. So they're saying, if you're reading this, treat it with the same caution you'd treat the most volatile traditional assets.
Exactly. They're shouting at the reader, this is speculation of the highest order. The source even says you may sustain a loss of some or all of your invested capital.
Wow.
And that you should never speculate with money you can't afford to lose. That level of severity, it just underscores the volatility of the whole asset class.
And there's another detail in that warning, something specific about the UK.
Yeah, a really important jurisdictional detail. It notes that trading crypto CFDs and spread bets is completely restricted for all UK retail clients.
So what does that tell us?
It shows that even as these projects aim to be borderless, the actual, the mechanisms people use to get exposure to them are tightly controlled country by country. For UK retail, the regulators just shut down the most common ways to speculate.
So it's an environment of super high risk, but also super high regulatory constraints.
Precisely.
Okay, so we've got the caution. Now let's use the author's blueprint, that table of contents, to really map out the controversy. Starting with tokenomics breakdown, that feels like a deliberate choice. Isn't that basically telling the reader that the project was flawed from day one, rather than just reporting on a controversy that developed over time?
That is a really, really sharp observation about the framing.
Thank you.
By leading with tokenomics, the author is signaling the core problem is technical, it's structural. It's not just bad PR, it's intrinsic to the project's design.
So when we say tokenomics, what are we really talking about here? Supply, distribution.
All of that. Supply, vesting schedules, who gets what and when. And the reason that invites skepticism is, well, imagine if 70% of the tokens go to the founders and the early VCs.
Okay.
And that 70% starts vesting, so it becomes sellable almost immediately. It suggests the project is designed for a quick payday for insiders, not, long-term community growth.
So the breakdown is really just about figuring out where the power is, and I guess when the risk of a massive sell-off is at its highest.
You've got it. That's exactly it. If the tokenomics are skewed, the market is structurally fragile. That fragility leads us right to the next section in the article, criticisms and pre-sale conditions.
The flashpoint.
The flashpoint. This is where the perceived unfairness really comes to a head. Pre-sale conditions just means what price did the early guys get versus what price did the public face when it listed.
Can you give us a sort of classic example of how that can go wrong?
Sure. The classic red flag, and this is what causes so many of these controversies, is a huge price gap. Let's say the pre-sale let insiders buy the token for 10 cents.
Okay.
But the initial public listing price is set at $1.50.
Oh, wow.
Right. You've just created a massive 15x arbitrage opportunity for the pre-sale buyers. They can instantly sell for a huge profit, flood the market, and completely crush anyone who bought in at the public price.
And the article is prioritizing this, which tells us the community felt like the whole thing was structurally unfair, like it was set up for them to fail.
Exactly. And the proof that these criticisms actually landed is that third section in the table of contents.
The shift in Aztec's strategy.
Yep. That section confirms this wasn't just forum chatter. It was powerful enough that the company had to go into crisis management mode and, likely reconfigure vesting schedules or allocations or maybe even governance.
It really shows the difference between the old world and this new one.
It really does. In a traditional IPO, the terms are set. They're rigid. But in DeFi, a project lives or dies on community trust. A crisis of trust like this forces the team to act, to adjust the entire financial engine, the tokenomics, to try and win people back.
So that's the whole narrative arc right there. Controversy on fairness leads to a strategy shift.
The entire crisis in 3 steps.
Okay, so we get the crisis now. Let's ground ourselves in when it happened. November 14th, 2025. What did the broader market look like that day, according to the source? Was this just Aztec's problem, or was everything on fire?
Such a good question, and the snapshot in the article shows this fascinating mix of signals. It suggests Aztec's issues were largely its own, not part of a systemic crash.
Interesting.
We were definitely in what you'd call a risk-on environment, but it wasn't a simple boom across the board. Look at silver.
What?
It surged. I mean, it was up plus 5.46%. That is a huge daily move for a commodity. It tells you capital was flowing and risk appetite was high.
Right, and it wasn't just commodities.
No, traditional stocks, too. EasyJet was up strongly, plus 2.83%. So liquidity was definitely moving into more volatile assets. Palladium, cotton, they were also up a bit.
So if the riskier assets are spiking, it implies there's confidence in the market, right? People are willing to deploy capital.
Exactly. But, and this is the interesting part, it wasn't universal. The established pillars of finance were either flat or pulling back.
Like what?
Well, the major currency pair, EUR-USDC, was down a little, -0.04%. 0.04%. Santander shares dipped a bit, Menifau up 0.13%. It's the other piece of data that's really key, though.
The VDEX.
The VIX. The CBOE volatility index was noted as being stable, 0.00%, no change.
That feels really important. If the volatility index is flat, it means there's no widespread market panic.
No panic at all. If the market's fear gauge is stable, then the Aztec crisis had to be purely project-specific. It wasn't just collateral damage.
Which almost makes it worse for them.
It does. It means their controversy had to overcome a pretty strong, risk-tolerant market backdrop, which only amplifies how severe the criticism must have been.
Perfectly put. Okay, let's pivot back to regulation for a minute. We touched on it earlier, but the source explicitly links itself to specific global bodies. Why mention the FSCA and SICE when you're reporting on a decentralized asset?
This is so critical because it explains the legal world the publisher has to live in. Aztec might be decentralized, but the analysis of it has to follow the rules to be seen as credible.
So who are these bodies?
First, there's Market South Africa, which is regulated by the FSCA, the Financial Sector Conduct Authority, under a specific license number. And they also have a license as an over-the-counter derivatives provider, or ODP.
Why is that ODP license relevant for us?
It matters because it shows the publisher isn't just a news site. They are legally authorized to handle high-risk financial products in that part of the world. It proves their whole operation runs under an official mandate.
Okay, so that covers South Africa. And then we jump to Europe.
We jump to Europe with SICE. The other entity they mention is SafeCap Investments Limited, regulated by the Cyprus Securities and Exchange Commission, SICE.
And Cyprus is a huge financial hub for the EU.
A major gateway. So by citing both the FSCA in South Africa and SICE in Cyprus, the source is basically telling you, hey, we adhere to financial conduct rules across multiple continents.
It's a way of building your own credibility.
It's a huge way. It tells the listener that this commentary on a high-risk token is coming from a firm that has jumped through all the regulatory hoops in 2 major financial hubs. It just shows you the complex legal web that surrounds all of this.
So this whole deep dive, just from a single source, really lets us pull out so many layers. We use the author structure to define the core issues, the flaws in the tokenomics, the fairness crisis in the pre-sale, and then the strategy shift. And we placed all of that against this backdrop of extreme financial caution and this stringent global regulatory oversight from bodies like the FSCA and SCC.
And that leads us to the final, I think, the biggest question that this article poses for the future of finance.
Go on.
The source stresses the high risk of trading. It emphasizes oversight from regulators. It operates completely within a framework designed to protect capital. And yet the very last section of the article is the future of Aztec network.
An innovative project designed to operate outside those walls.
Exactly. So what does that tension tell you about the long-term trajectory of DeFi? How is it that these innovations, which are sometimes designed to skirt the traditional system, they inevitably end up being measured and discussed and framed by the strict, regulated frameworks they sought to replace?
The paradox.
It's the paradox. Decentralized innovation judged by centralized regulation. And that, I think, is the defining struggle for the next decade in finance.